What's going on, guys, and welcome on into the channel. So I have to make this video, and if you guys can't tell, we are looking at wish.com. This is because this is one of the stocks that just got absolutely destroyed after their Q2 earnings report, and want to talk about why that happened. We actually made a video over on the Stock Trends channel. There's a link down below in the description box. We talked a little bit about it, but I also want to talk about it here because it's less about the technicals and less about the stock, and it's more about the other reason why it plummeted and why other stocks, even Sofi earnings, plummeted. Taking a look at Wish, you can look at price targets, you can look online and see all you want to see, but at the end of the day, that doesn't matter. This is the chart, right? After the earnings, the stock went from over $9.50 down near hitting lows of $6.54 so far, and it could be going lower. That's when I'm filming this video. That's at least as low as it's gone. It could go lower. It broke below the lows that we saw back down towards 752 back a couple months ago, and we're falling even further. So why did this happen, and how do you protect yourself? How do you protect your downside from this happening in the future? I think there's a couple ways to do it, but I think there's an overarching reason why this happened. I'm absolutely not someone here to bash anybody because I've had my fair share of massive losses as well in the past, and the thing that I can correlate some of the recent losses that I have personally had as well is I can correlate it to social sentiment. And I think this is a massive part of trading right now in 2021 that we saw social sentiment as such a bullish thing a couple months ago. Back into January, February, back into March, short squeezes galore, AMC, GameStop, you saw all the penny stocks going crazy. But you just scroll through, Wish on StockTwits, you scroll through Wish videos on YouTube, you scroll through Wish, the hashtag Wish on Twitter especially. And there's just so much. There's so many people talking about it. There's so many people that are, in Wish that were kind of doing their own TA and talking about this and talking about that. And, next thing you know, the stock is plummeting. And why did we see this? Well, we saw a subpar earnings report, okay? Subpar earnings, and Wish started to pull back. Now, should Wish have pulled back to the degree that it did? Should Wish have gone from sub 10, so around 950 to 650? Should it have dropped $3? Should it have dropped about 25+% on this earnings? Probably not. Probably not. It probably should have fallen, I would say, roughly 5 to 10% max. I don't think it should have fallen 25, 26. Now we're looking at down 27%, at least from right now. Shouldn't have fallen that much. But why did it do that? It's because it's the retail crowded trade. Someone called retail crowded, and it's just that is right now not working. You even saw it on a stock like AHT, right? And that was one of my biggest mistakes. Even though I thought it was a decent recovery play, it was very retail crowded. And now looking back, that's why I wasn't personally in Wish. It was because it was so retail crowded. I didn't care. I was in Wish, I believe, back in here, and I sold some up over 12, and I was like, okay, that's it. I'm going to move on. And in longer term portfolio, after it made a pretty good move, it was up to 10, 20% from my average. And I said, you know what? I'm going to take these gains and I'm going to move on. And next thing I know, it got rejected at 15, didn't break out. And I was like, okay, it was a good decision because it got rejected, didn't break out, is what it is. Even if it ran, I wouldn't care and move on to something else. But this is the power right here of being a retail crowded stock. And it happened with Sofi too. If you look at Sofi, not to the same degree, but Sofi was popping on up, hit that 18 resistance, and then just plummeted after earnings. And Sofi had decent earnings. They had better earnings than Wish. In terms of their platform growth and whatnot and some of their numbers, it looked much better. Now, Sofi's got some support. It's still holding up in the 15, 14, 50 level, at least for now when I'm making this video. It could change after the video, right? But this is another example of this was another one where you go on to Twitter, you type in Sofi, and you just see so much action. For whatever reason, you're not seeing it right now, but at least yesterday when I was looking at it, you saw so much action on this thing. And it was just like, when that happens and you have people who are YOLOing X number of shares, this, that, and the other thing, what ends up happening with that is you just have such emotional traders, such an emotional reaction. And it's something that we always say, stay away, remove your emotions, remove emotions, which is fine, right? You get it. But when it comes down to it and your stock is down 25%, are you going to have the power to remove your emotions? It's a lot more difficult than you think. And this is literally human psychology at play. We see a perfect example with Wish. So many people, hundreds of thousands of people following somebody, buying it because they're buying it because they're successful, putting tons of money, putting life savings. I know it sucks. It does. But this is something that can be avoided. It's simply because you're not doing your own due diligence and you're really in a crowded social trade. If 90% of active traders lose, earnings reports are the perfect bait to get traders to sell, to give the institutions, to give the hedge funds the opportunity to short or to take free shares, to take cheap shares on something that they are going to make money on longer term potentially, right? We're just speculating on that. But this is an idea that realistically, the social trade right now is not where you want to be. It's because we've also lost some steam. Wall Street Bets, Reddit, that crowd, we've lost attention. People don't care about stocks anymore because it's hard. It's gotten a lot harder. It's not as easy as just buy something and it goes up. No longer are you seeing that. We had that crazy run into last winter. Not anymore. So for those who are getting burned consistently by following somebody else's advice, by following someone else's trade, why is that happening? It's most likely because you're buying in significantly higher than them. And potentially for some people, even talking about some videos of penny stocks, we see people do all the time, the pump and dumps, right? They're pumping it up only because they're in, and they're dumping shares onto their followers. And so you start to see that is a legitimate way that people are making money in the stock market. And, SEC, get them involved. It takes years for them to even get involved and for them to even make a case. And with how rapidly changing social media is and the pump and dumps and all that stuff, it's, just a different story and different level these days. But that aside, right, you have to start to realize that there is a lot of value in doing your own technical analysis and doing your own fundamental analysis and also having your own rules. Because what's a very common rule? You ask a lot of successful traders, what's a common rule they have? I don't hold through earnings. I don't. Or if they do, lottery. If I'm holding through earnings, I know it's a complete lottery and I'm holding shares, not options. Or if I hold options, they're lottery options. I don't care. That is what you'll see across the board with successful traders. But what do we see across the board time after time after time is people continue to do that. They continue to hold through earnings. And if you do that, that's one thing. But if you do that with no risk tolerance, with no risk management in place, and with no idea what you're about to get into, well, then you end up being the person that's panic selling the second the stock starts falling off. Down 5%, down 10%. Let me cut my losses here. And next thing you know, stock's down 25+%. So hopefully you didn't get absolutely burned with this stock, and it certainly could come back. I'm not saying it's not going to come back. It certainly could come back, and I hope it does. I really do. It could be a better opportunity now, for someone looking to go long, down here sub $7 could be a really good opportunity. But this is an example, again, of the social sentiment, the crowded trades, and why retail traders, why 90% of us lose money. It's because most people are emotional, most people are following along, and most people are not willing to put in the time to do their own assessment, to manage their own risk, and to do this themselves. You don't have to be a day trader to make money, but you can put yourself in better risk reward situations with a little bit of extra time at night, in the morning, whatever. And it's something that I think a lot of people need to focus more on. So if you guys got something out of this video, hit that thumbs up button. Make sure you are subscribed to the channel here. We have plenty of videos and playlists going over how to find stocks to buy, how to do your own technical analysis, risk management, all that stuff. So I really hope that this channel is much more useful to you in that regard. And this has never been, the intention of this channel has never been, buy this stock, follow me. I don't care. I hope, and I would prefer no one follow me at all. That's why I don't talk about day trades in terms of when I'm doing them. I talk about my portfolio and what stocks I'm invested in right now. We talk about that every week. But outside of that, we don't talk about the day trades. We don't talk about the short-term stuff here in terms of, get in now. I don't want anybody to buy a stock because of me. I want them to buy a stock because they've done their own due diligence, they've assessed their own risk, and they like the play for these reasons, and they can back it up. And if something happens, they know exactly what they're going to do because they have a trading plan in place. Thank you guys so much. Appreciate you guys all for tuning in. If you were burned, I understand. I've been there myself many times. And lately, past couple months, it's been choppy. It really has. It's been a lot choppier, but sticking through it ultimately is going to make you a much better trader or investor longer term because you're going to have all these experiences now to look back on and learn from and make sure that this doesn't happen again. So I appreciate you guys for tuning in. Stick with it, and I'll see you guys in the next one. Peace.